All right, here I'm DayTraderRockStar. I'm working on a webinar that I'll be doing for the Money Show. I believe it's October 27th. I'll probably add the information in on this, but it's towards the end of October. I'll send out some emails to update you. And in this webinar, normally I'm usually concentrated on something out of the high probability methodology, understanding that I have a very good system with stochastics that it's hard to kind of talk about anything else other than what really works good in the market for me, and continuing to teach that. But there are some other setups that I use as I wait for divergences and some other setups to take place. They're called the playbook trades. Playbook trades are probably about 7 in total that I'll go to if I see the setup in the market. Their potential trigger areas for longs and shorts, and they're all based on technical levels. As we can see in the markets, lots of algorithms are out there, black boxes, just a lot of calculations going on support and resistance, and really trend lines. And we see that I can map this out. I do map it out each day. Each day I map it out live on the air, and we see the reaction, especially to the trend lines that we put in, and we see markets react to the VWAP, the 200 period moving average. But there's a combination of stochastics I always have on my screen, and I always get, this is really the foundation. So the webinars are going to be based on, the next really good setups, which I, would say would be the 2020 bull and bear flag, and a little bit more into what's called a triple stochastic rotation setup, plus the divergence. So kind of those 3 setups, but with a little more emphasis on the bull and bear flags, how to identify it, how to set up your machine for it. So that's what I'm doing tonight. So just look forward to that. I'm going to go over some things right now. I'm very happy to show you. We could probably even do a mini webinar right now as I wait for the debate. Let me open up the chat room here. And what I'm doing is, when we talk about, during the webinar, I'm gonna have to start from the bottom up. So I'm gonna break down the stochastics in a general format and explain what stochastics I use and why do I use these. Each one of these stochastics are based on a kind of what we call a different time frame, based on how many candles you're looking back. And remember, you're always using period as your indicator. Especially, I see a lot of people saying, "Oh, the market here is coming down to the 200 day moving average," where it should be said the 200 period moving average, because we're on the 1 minute time frame. So it's not anything to do with the day. Same thing with stochastics. They all have a different meaning, whatever time frame you use. So the setup I like to use is on a 1 minute time frame, but it can be used on multiple time frames. You can use it on the 5 minute, 60, whatever. It works, and it's almost it's just a scientific thing that works more than it doesn't. So so I'm going through some of the old charts, and what I like to do is just what I call do the roadmap of the chart. Follow the day through, kind of just going through watching it, and then I'll circle levels that might have gotten my interest because of something that that's in the high probability methodology, be it a divergence or a near divergence or a bull bear flag setup, which is right there. We can actually see that nice flag. As we hold the 20, we get a fast rotation, and that's what we're going to go. But the first thing we want to really talk about is the stochastics. And the stochastics, again, not to get ahead of myself, unless you know what the stochastics represent or how they're working, you're just taking my word for it. It's best to get a little knowledge on it. All right, and then what are the other indicators? I don't know who's out there really. Maybe you're a beginner trader and this is just way over your head, but I try to keep it simple, and it's really I think the most logical method of trading. out there. It's not a momentum type of trade, but it can be momentum type of trade because that's what we're measuring. We're measuring momentum. As you can see, the stochastics, they're called fast stochastics. You keep the fast, or you could make this one the full. The 60-10, the 314, and the 3-9. And not to go over a whole thing on stochastics again, but these were developed by George Lane in the 1950s to measure momentum in a stock. And the formula, it would look like a regular math formula to you. I'm not even going to go into that. You can look that up on the internet. And then the formula here really places the stochastic marker here and takes, constantly tracks what the formula is spitting out and plots it on the line between 0 and 100. And really what that's telling you is on that time frame, excuse my throat there, on that time frame, 0 to 100 represents the range. The 0 range is the low, the 100 is the high, and where the price is heading for on each time frame and where it's being measured and averaged in. So these are where the and again, we're going back, how many periods we're going back. In this case, we're going back 9 periods. So we're taking all 9 candlesticks and the closing prices and everything, the calculations. They're plotting it at that point where it's closing. At this point right here, we're in the lower part of the candle. When we start moving back up, momentum starts to shift. And we start to read that on the stochastics and know exactly where our momentum tops out, and we start to move back down. And you can start to learn something from that. And each time frame gives you more information. So the 9 is a pretty short and very fast time frame. It's only taking 9 periods of information and calculating that in. So you're going to be very, very choppy. 14 is a little bit longer, and I use the 9 and 14 together, but I'd like to see the signal both on the 9 and 14. And then we have the 60-10, which is, that's the key. That's I think the hidden sauce right here. The 60-10 is knowing how to read the 60-10 is very important also. Getting back to this here. So, and again, how George Lane developed it and stuff. I have many webinars. I did the last one here for the Money Show on the divergence, and there's plenty of information out there on more of the formula. But the important thing is understanding how that's working and kind of giving us a momentum shift. And one of the great examples I always give is the concept of the rocket going in the air. Let me see if I can pull that out real fast here. So here's the concept George Lane quoted saying stochastic in there by saying stochastics measure momentum of price. If you visualize a rocket going up before it can turn down, it must slow down. Momentum always changes direction before price. Think of the booster. If you know anything about rocketry or anything like that, when you cut the engines off, it still has a thrust. You're going to continue to push forward, just like you're running after pushing a bike or anything. That momentum will carry it forward. And that's what happens when we start to see the shift in momentum. By reading stochastics, the underlying stochastics, it's then we get a clue, and a clue is a proactive clue instead of reactive clue. So again, recap here: 3 to 9 periods fastest. 14 is a little bit faster. That's the original 2 that George Lane used. 60-10 is something I have added on my own after a lot of study of testing, back testing, way back in the day, and use this in the 40-10, also the 44 actually, the 44, to really understand and not have to switch from my 1 minute to a bigger time frame. I could actually read my other 5 minute time frame here, because when I'm looking on any charts, the price is all good. I'm looking for trend lines, and I'm looking at the stochastics. By having the 60-10 here, it's telling me that 5 minute chart, it actually corresponds to the 5 minute chart perfectly, that our 5 minute chart here is oversold using stochastics. So I'm looking at a 1 minute, 5 minutes, so I know that that's a great level also. So we use that on strength, and that's why the bull flag works so well, because we know that the 5 minute is a larger channel, a larger trend. We know where it is in its trend, We know that that lasts a longer time than the 1 minute. The 1 minute could get overbought, oversold real fast. I would say on average 7 candles per per time frame. So if you're on a 1 minute time frame, on average I see about 7 candles to get up there. Now on a 5 minute time frame, 7 candles is not 7 minutes, it's 35 minutes. So it's a much longer opportunity to catch a bigger move. So here, all this chop in here, 1 minute time frame, one pop, 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 pop. The bigger move, 5 minute time frame. The real big move, we zoom out, 60-minute time frame. So all those time frames working together, having them all three down there, gives you a nice rotation and understanding where the bigger trend is. Bigger trend is getting oversold. The 5 minutes oversold now. Probably going to get a push back up when the 5 and 1 minute. This is called the triple stochastic setup. So that'll be on the webinar. Let's see what else I have. So I was going through the flags here, and just going. I want to show you some examples. A strict bull flag for me is the criteria. Basically, is here's probably an example. It's a fast move up, very fast, strong move up. Very strong, and in case each situation is different for a bullish or bearish trend. So, that very steep move up pulls away from the 20-period moving average. What is that? F2? What is that? F2, right? F2. And then you get a pullback here. While this pullback is happening, you're measuring out everything underneath it. So here you got a nice run. Everything's overbought, overbought, overbought. But the 5 minutes here is up here, and I really like that 90 level. Normally I say above 80. It's called the 2020 flag, but we use 20 and 80 as our overbought and oversold indicators. The other important thing about this is if I see a 90, if this is holding up above 90 and this pulls back real fast, that's even a better setup. So anything above 80, the higher it is, and you get a rotation, and the stronger the flag is, the more success you're going to, and that's just a textbook high probability setup that I do not want to miss. So you look for the pop up here, a couple, what's the criteria? You need a nice move, a directional move down or up. Then you need that retracement. In that retracement, you're seeing that 9-3, and I'm usually the 9-3 on this. I'm not usually using the 14, but like I said, I have the 14 on there, and the 14 happens to the pull back too. That's just as well. But I'm always watching this 9-3 and seeing how it acts with the 20-period moving average. So if this comes down to the 20, this holds above 80 or 90, and the price is above the 20-period moving average, all those things represent a bull flag setup. And from that point on, you're looking for a pop. And now 1 minute time frame pops are exactly that. This is a scalp. This is almost a hyper scalp trade. It's a very fast trade for 1 to 2 points in this market condition. I would say 1 to 2 points, 8 ticks, which is not bad because the probability is just like you're playing. I always use a metaphor or some kind of analogy to show how important it is to have those rules. If you were in there and you're playing money and going to a casino and you know anything about gambling, you would, have that little cheat card there and telling you when to hit and when to, if you're playing blackjack, where to stay, where to hit, and when to take insurance and stuff like that. That's there for a reason. It's an odds card. And there's no way of being real successful through luck. You need to have all the odds in your favor. So this is like the odds card. This is a very high probability setup. You're going to get that move up because it's shown over and over and over again. And we know how to read it. And it's so great that I'd recommend taking all those trades like that. Every trade that qualifies, I would be taking that trade. Now, again, just like anything else, you could have 8 winners and 2 losers. And depending on where your entry is and where your exits are, it's all still trying to thread the needle overall. But that's a great example. And I'm saying, all right, Let me see if I can find any more, because this is going to be, I see other things happening here. I see other setups. I see the bear flag. I mean, I see bearish divergences. I see regular divergences. I haven't even looked for the bear flag yet. I was just concentrating on different things, and I'm just going through the charts here and not trying to get distracted too much. And then let's see here. This is kind of a nice setup, but that's a marking close. Let's see here. See the stochastics up here, and this is kind of overnight too. So even the overnight trade, I mean, you might as well work with that. Work with the rotation. But I'm not a big fan of the overnight trade unless you get a kind of a triple stochastic setup where you have everything oversold right here. You got a decent bounce. But those flags usually come with the open market and some good volume, or at least after 3 o'clock. And it's such a tight criteria that it's easy enough to recognize when it happens. I'm not seeing anything here that happens usually after a situation like this. A big pop, and you see how the consolidation is and where this, but this didn't qualify. This wasn't pinned up here. This very close qualified. It's holding the 20-period moving average. Stochastic rotation doesn't always have to get back to 60. The important part is seeing how strong this is. I was at 90, and this was starting to get to rotation, but it didn't look like it was going to stop. And, I mean, you could have actually read into that one a bit. You started seeing some bull flags here. Same thing here. Here's a good example of one. Nice move up, the pullback, and look at the pullback here. The pullback here to the 20. This pulls back down to the 20. The stochastics here at 91. That's an extreme bull flag right there. That's a 2020 bull flag right here. It's one of the stronger ones, and there's your move. Now, like I said, this is a fast move. Looking for 2 to 3, maybe 8 ticks, 2 points, maybe more. I don't usually look for a continuation. It's a very fast trade. Lots of times this trade will turn into maybe a divergence to the downside. That flag is very good, but lots of times that flag will pop it back up to highs. After it pulls back, you get your entry because of the signal. Pops it back up to the highs. Stochastics fail to rotate back up. You have a bearish divergence. So there's a lot. These turn into this a lot. They turn into each other all the time. So I'm looking at a couple other things, and that's what I probably have to cut and paste that one. So I want to give you an example. So let me do that right now. Pause this. So I'm just thinking, I said, you know what? Yeah, I like these so much, and since I put out that Rockbot, I didn't want to miss this on the Rockbot, so I did do the script for identifying, or at least helping identify the Rockbot, the 2020 bull flags. I put my criteria in the Rockbot. You have that available on the bot. So I'm actually going to see if it picks these. I want to see if it picks these as bull flags, see how well it's working. It'll be much easier for me to activate it and see where the bull flags are and see if they qualify versus trying to find them. So what am I doing? I already have it. You already have it, which is going to help you. And you're not supposed to take every trade, especially to measure the divergences against the overall market conditions or the bull flag of overall market conditions. Those flags are hyper scalping trades. So there's right here, Rockbot bull flag. Am I not on? Did I not even? I didn't even have this stuff showing, did I? Oh my God, that's so funny. Well, anyway, at least I recorded it. I recorded it. Now you're all gonna have to watch it. Anyway, I'm on the bull flag here. So let me go back here. I apologize. Let me pause this so I don't double up. Now that I got everyone back on track here. One thing I did want to do is activate the bot here. Put up the bull flag, which is here. Now the bull flag here, I believe the parameters are set defaulted to take profits after 4 ticks. Again, I think this is a good hyper scalper technique. Stop loss, put it in as 2 points. Trailing stop, you can follow it up. Again, everything else is working, but it's only give you 1 profit in the trail instead of 2 profit zones in the trail. This one, the flags only give you 1 profit plus the trail, meaning that you take profits, the trail comes up to wherever you want it. And so let's activate that. So once you enable these things, I'm just going to do the bull flag here. I have it on the 1 minute bull flag, bear flag there. Okay. Let's see here. Let's see if any of them picked up any of our flags and what they look like. All right. So here we got. So you can see some of them right here. Let me see. Let me start all the way back here. All right. So again, this is I think something we showed you earlier. The criteria has to be there. The first part of the criteria, and I'm going to tweak this a bit because I've noticed that there is ways of actually making a little bit more picky, so to speak, because there's a couple things I could do to make this thing even more successful. So look at this. Identify a bull flag there. Prices pulled back. It has a nice move up. Pulled back to the 20. Stochastics rotated back to 20, and this was holding above 80. So that was the qualifying thing. Then it looks like there was another one here, and it took profits again. Again, fast. It's a fast hyper scalper, but the key is having that. Here it is. A move up, fast move up. The pullback, holding that 20 period, but comes back above the 20. Stochastics got oversold. The 60 was above that. It gave us a nice flag, and off to the races it went. Let's see here if we missed anything. I'm not seeing anything yet. What's this? Take profits again. Good. That closing candle, or this candle, was holding up right as we're oversold, and we're here. It didn't really drift too much. Started turning back up. Took profits. It went chopped sideways. You can see it says take profits up there. Then it moves the trailing stop up there. Bull flag here. I did mention this one. It got oversold right here. Stochastics here above the 80 level. Bull flag. And then right before that, take off, trailing, Then another one came in. This one looks like it came in and failed. So here's one that actually failed. It took a 8 tick stop. Let's see what happened on that one. It was oversold here. Oh, why is that? Oh, it was here. So it was a bull flag here, pop, and then it pulled back. The price is at the 20. This rotated back real fast. This was heading down. So what I could do here is actually make sure that this slope between the last 2 periods, the last 2 minutes, the slope of the 60 needs to be heading up, like 2 candles. Stochastics, the stochastic level 2 candles ago have to be less than stochastic level 1 candle ago, or current candle. So at least we have that. That would solve some of the chop. I was just thinking about that before, and I'm probably going to do that. It also won't give you as many setups. Lots of these just work out. But another tool, and something that you do have that. I'm not seeing anything here right now. Let's see what happens. Runs overnight. I don't like it overnight though. I like it, big moves like this. I was just gonna say, look at this. Market's moving up. Rotation. This could have been one. It was very close. It almost got down to the 20. I probably would have taken this. Popped. This was a clear one. Rip up higher. Pull back. Look at it pull back. Look at where the stochastics were. That was a perfect example of a bull flag right there. And then boom, right back up. And then took profits, and then a trailing stop came in and locked it in. So that was perfect. Another nice bull flag here, taking profits. This one doesn't look like much happened. It got a little choppy here. But again, I bet if I had these, I want to set that up. I want to actually set that. That could have been. That could have been a good one. Looks like news came in here. I'm not going to blame that one on anything other than news, because that's when the news came out and the market dropped here hard. Market here dropped really, really hard. That was overnight too. Like I said, that you don't want anything like that happening. Same thing here. Some news came in, so. But that's what we're doing. Identifying the potential bull flags for you and watching them rip higher, and they're very fast hyper trades, but the criteria is there for it. I'm very happy with what it looks like. So now I'm looking at over here, the nice divergence long. If we have the bot there, I don't have the bot on the recording right now, but the rock bot has the divergence long. It nailed that one right there. Took profits all the way up. And then now it's chopping around. But boy, that was a textbook little divergence. Beautiful. I'll show it to you in the screen there. So I'll switch it over here and let you see it here. Look at that. Now I can run the bull flag and the divergence together. I can do that. I might do that. We'll do that for tomorrow. Just remind me to do that. I'll set that up tomorrow morning. Make sure I have it cleaned out. Fresh start though. All right, so there it is here. I just got that for you. Thursday, October 29th, 2020. 12:40 p.m. to 1:10 p.m. You're gonna have to sign up for it. There's a link here. Personal link to your speaker page. I got a page. I don't know what it looks like. Oh, there I am. And then you sign up here. So I'll post that in the bottom of the video. I'll give that guys. I appreciate it if you sign up. I'm gonna go over some good stuff, and then I do it for these guys. It's free. I appreciate it. Even if you can't make it, they'll send you the information. Copy that. Let me put that in the description after. And I think that's good for this. So that's October 29th. The debate's going to start soon, so I'm going to get that out. But there's going to be some good stuff. And tomorrow, I figured I'd just throw out something. A couple interesting things. I did a little after-hour action on, what was it? It's gone now. I'm going to do a little bit more research in this Bloom Energy, which is looking really good. There was some other recent IPOs that are approaching all-time highs. This is broken out. Got some good momentum behind it. Volume has picked up. I'd like to see one more follow-through day and see some good stuff on this. Again, 2018 highs here up around $40. $37, $38 is 21. I could see this going, and this could, we talked about it a lot today, so still in focus for me on this one. What was the other one here? We got into P. Let me see what that was. PLTR. Coming back strong. Palantir Technologies. If we get a move tomorrow and we break this 1069, boy, we're gonna rocket through this IPO high. I think it's gone. We'll see what happens tomorrow if we kind of pull back a little, put in a what I call slanted W pattern before taking off, or if we continue to, again, if we take out, my guess, if we take out 1073, we're getting through the highs. From that point on, maybe we get to 12. but it'll get up there. But this is a little reversal candle. We're watching it closer tomorrow. We took profits on tap today. That was a good, and probably still going to go. I didn't finish taking my profits on the plug yet, and that still looks pretty good. So I'm going to probably end up doing that tomorrow too, as it just exploded to the upside. So we're looking really good on that. Tomorrow morning will be the time to get out of this. We'll see what happens with Boeing. That's been a crazy stock. Did well with our puts this week. We had some hedged puts, just kind of in case some bad news, and then Trump announced breaking, calling off stimulus, and we were able to profit from those puts, and then we went long, and we were able to profit from those longs. So tomorrow's a new day. I want to let that be. I want to get ready for the debate. I'll see everyone in the market. If you're listening to this video, then I'm closing up. I'll see you guys then on DayTraderRadio.com.